Good morning from our global headquarters here in New York. I'm Manish Cranny. You're welcome to Bloomberg Brief. Let's set your agenda. Risk on and powering through to new record highs. U.S. assets are emboldened as a Republican victory continues to boost risk appetite. Finish the job. Minneapolis Fed President Neel Kashkari says the path to 2% inflation is not done yet. And President-elect Donald Trump taps his former immigration chief, Tim Homan, as the border czar. A very good morning to you. There is an alpha to these U.S. assets again this morning. You're looking at putting in the 50th record high in U.S. equities last week. SPOOs are up 4.7% on the week. And your small caps, they are driving ahead again this morning. You've got the best week since 2020 in there, up 8.6%. You're trading on a forward PE of 22.5. Is that rich? Is that rich for your blood? Right now, equity risk premium is in excess of the risk-free, and that is at the lowest level in 22 years. Roll it over. There will be a screech one day when these bond yields. We're closed on the cash, but what I wanted to show to you is what happened in the 2s, 10s last week. It is Veterans Day. The cash market is closed. What you've got at the bottom of your screen are futures, U.S. bond futures, which are down 12.30 seconds. The yield is rising this morning in the equivalent of cash. But this spread is the tightest in nearly a month. So we paused for a breath in the bond market last week. We actually ended up having the best week in bonds in 2 months. So there really was bond whiplash. Bitcoin, no such thing, powering through 81,000 and change, 81,785, nearly at 82,000. The flows into the ETFs are pretty substantial. This is the personification of a Trump victory and perhaps a pro-crypto regulatory stance. That's the shape of play in stocks, bonds, as I say. The cash markets are closed for Veterans Day. It's a big week for CPI. We'll talk about the slate in just a moment. Let's follow on from last week's FOMC decision to cut by 25 basis points. Minneapolis Federal Reserve President Neel Kashkari appeared on Face the Nation to reiterate that the fight against inflation was still on the Fed's agenda.
Right now, the economy is in a good place. Inflation is still running around 2.5% or so we're not all the way home. We need to finish the job, but so far, so good. I mean, I don't want to declare victory yet. We need to finish the job, but we're on a good path right now.
With the fight still not over and the prospect of an inflationary Trump presidency, our next guest writes this: the largest impact will come from the inflation channel, and although tariffs are somewhat transitory, we believe that the Fed may be cautious in allowing another period of higher inflation so soon post the recent episodes, and therefore will react. It is Jamie Niven, Senior Portfolio Manager over at Candriam. Jamie, thank you for joining us this Monday morning. I mean, look, your top conviction is long the break-evens. You believe that this inflation narrative will reassert itself. So let's start with that. Do you believe that these break-evens and the inflation narrative spikes higher even in advance of what we know for policy on Trump Mark II?
Look, let's start with where we thought we were before the vote last week, and our view was that the disinflation process was really in process under the previous administration, or the current administration, apologies. And the big change is the fact that we have the Republicans taking both the Senate and the House, as well as the presidency, and the ability to do significant change, whether that's on the regulatory front, whether it's with tax cuts, or also with the tariffs. We think all three of these are inflationary, and if you add in that the potential immigration impacts, then that could be inflationary as well with lower labour supply. And therefore, we think that although the market has adjusted somewhat, we've seen US break-evens are higher than they were a couple of weeks ago. There was an increase both before and post the vote, and we think that can move further.
Do you think we get inflation or stagflation?
That's a very good question. I think with regards to the tax cuts and also potential fiscal spending, I think that could be some growth upside there. Evidently, with tariffs, you have the initial inflationary impact in the short term. We know that that's relatively transitory. It's a one-off increase. But in the medium term, you'll have the negative growth impact. So I think the question is a very good one, and it's a bit mixed, the answer. But I think in the initial stages, particularly with the animal spirits. We're seeing that from the equity market, and probably the uncertainty dissipating for businesses, that therefore they can start investing again. We think that there will be a positive growth impact in at least the short term.
How difficult is it to restrain oneself from entering these equity markets at record highs, 50 in a row this year, 20 billion went in last Wednesday? Is that a difficult decision given the valuations that I've given, 22.5 times forward earnings, or is it hurrah, jump over the cliff?
Well, thankfully I don't have that capacity in my fund. I run a fixed income vehicle, so I don't have to think too much about investing in equities. However, there's implications for credit. The only thing about credit is there's only so far that spreads can tighten. But going back to your question on equities, I think, as I say, the animal spirits come in, the positivity with regards to the certainty that businesses are going to have, or relative certainty with where the administration are going, make that an initial short-term positive trade. And there are particular segments of the equity market which are going to benefit more, particularly from the deregulation element.
Well, let's take it back to more to your ground zero. I mean, it is about asset allocation, whether we see cash from the sidelines come into the bond market or into the equity market. Rick Reader last week said venturing into the wild blue yonder of longer-term rates is maybe not worth the excitement or indeed the volatility. And one can empathise with that when you look at the extreme moves at the very long end last week. So where do you safely tuck away on the curve?
Yeah, the moves last week were interesting, weren't they? I mean, day one we saw the long end selling off, but then we saw it rallying back. We think that actually that was because a lot of people hedged their exposure prior to the election via 10-year, and I note that you pointed out the 2s, 10s flattening last week. We think that was somewhat hedges being unwound in the 10-year segment of the curve. But going forward, we don't like the long end of the curve. We think that there's that potential for risk premium, particularly from the fiscal spending. And also at the front end, I think that pricing is relatively fair for the upcoming Fed meetings. So it's a very difficult question with regards to the curve, but we do think that ultimately it should be a steepening trend, particularly at the longer end.
Well, that's what I was going to say to you. I mean, I was quite surprised when I actually looked at the 2s, 10s over the space of the 5 days, and I went, wow, that's actually the tightest in nearly a month. To me, that's a relock, reload on the steepener, if you assume the policies are as you potentially lay out.
Yeah, I think that the 10-year point of the curve is our favoured short right now. We think that should definitely move higher. With regards to the front end, I think it's more about timing there, because I think that in the short term, the Fed are still going to be focused on the data that comes in. They're not going to make too many preconceptions about what policy does come through. And therefore, in terms of the next few meetings, yeah, we could see 2 25 basis point cuts. And then once we have the implications of policy, that's when they'll decide what to do. And maybe that's when the front end moves a bit higher. But certainly in the initial stages, we think that higher yields come from the 10-year and longer.
So you're building up for a bit of a spoiler alert with the CPI then this week. I mean, we've got a number of speakers on the slate. I'm just looking here. You've got Waller, you've got Williams, but ultimately you have the CPI, and that could be a bit of a wrench for the old bond market.
You know what, Manus? I think the Fed would be happy to some extent to see a slightly higher CPI, because it would give them a reason to pause in the cutting cycle. They don't want to have any preconceptions about what policy comes out with the Trump administration. Powell was very clear with that last week. But if we do see a slight uptick in CPI, I think that could give them a reason to pause, and therefore it gives them more time to assess what the policy is. In terms of the number itself, we know that the second half of the year, over the last couple of years, has been a bit more positive for inflation, but I think the forecasts are for core CPI to be kind of 0.2 plus again. So relatively constrained, but maybe a bit higher than we saw in Q3.
OK. Let's see whether the spending on that election filtered through to the CPI. Jamie, thank you very much. Jamie Niven there of Candriam on the markets this morning. Some other stories trending on your Bloomberg channel. This is what we've got for you. Chancellor Olaf Scholz is open to moving a parliamentary confidence vote to before Christmas, potentially speeding up a snap election to February. Scholz expressed confidence in a victory despite the polls suggesting his rival is ahead. Schroeder's is shrinking the size of the executive committee to 9 members from 22. This is as the new CEO looks to revive growth. The stock has slumped as much as 50% this year and didn't rule out wider job cuts. Moncler is poised to take over Burberry, and staff have already been told about the possible takeover, according to the Daily Mail. A representative told Bloomberg that the company does not comment on unsubstantiated rumours. And it is flying high. We've broken through $82,000 on Bitcoin. So we are just seeing a nice wash through. Just look at this. This is pre-market on Coinbase, up 18%. Mara Holdings, up 18.8%. You can't deny that when it comes to regulation or deregulation, this is the personification of deregulation. Crypto world spent $200 million on political action committees. And the Binance CEO said it's a golden era for crypto. We'll roll on as Bitcoin trades through $82,000. Coming up, Trump's cabinet picks. They take shape. The president-elect picks his head of immigration and UN ambassador, while telling the former cabinet members they're not coming back. It is Bloomberg Brief. I'm Manus Cranny in New York. Well, the Kremlin has denied a report from Washington Post that the president-elect Trump and President Vladimir Putin have had a conversation about escalating the war in Ukraine. Joining me now is Anne-Marie Horder, our White House chief correspondent and surveillance anchor. I'll see you a little bit later on. So talk me through this, because we've got the Washington Post article saying they had a conversation, by the way, which was not guardrailed by anybody, we understand, from the State Department. And this morning, I have a different story that the Kremlin is denying the report in the Washington Post. So square it away for me.
Well, maybe they're denying the fact that Trump is saying that he advised the Russian president not to escalate the war in Ukraine, according to this Washington Post reporting.
Yes.
Allegedly, that is what President-elect Trump said on this phone call. They're not using government interpreters for this. They're not going through the State Department. Phone calls are not itself illegal. If it's working outside of foreign policy, if it's shadow foreign policy, that would pose a problem. But as one foreign policy expert in the Washington, D.C. arena for decades said to me, this is a raw display of political power. And right now, you are seeing a recalibration in the foreign policy sphere because the current president, Joe Biden, is the lame duck. And you're going to have, I think, former president over the weekend, for future president, called it more than 70 conversations he's had with foreign leaders. And they are trying to make sure that they have these conversations to understand what his foreign policy is going to be, because he has talked about on the campaign trail that he wants to see a break from the current status quo.
That's a really, really rich phrase. It's about, it's about showing, again, we wouldn't expect anything less, that something slightly out of the ordinary takes place. But this is all within the realms of normality. It's when he goes into the presidency that you maybe want to see a little bit more guardrails. We're also trying to understand who's in the cabinet. There's, Mike Pompeo, Nikki Haley, they're not being invited back to the table. So the question then becomes, he's made some appointments over the weekend. We've both just opened a story in terms of the Treasury appointment. It looks as if it's squaring down to between Howard Lutnick and John Paulson. So we're not overly confused about that. So it looks as if that's squaring away. What else do we know this morning?
So I would say for Treasury, also Scott Bessent is probably
of
one
course
of the
he's
main
in there as
front
well.
runner. If you actually look at the predict market, Scott Bessent is north of 80%. And the prediction markets were accurate when they were pricing in Donald Trump's victory. So potentially they're accurate when it comes to the Treasury appointment, and potentially this is an endorsement by the markets about who they'd like to see. I think Howard Lutnick's at 1%.
Well, he's in charge of sort of interviewing the people coming into the cabinet.
He's a co-chair of the transition team with Linda McMahon. But it seems that also his name is floating around, maybe to be the co-chair of the transition and name himself maybe part of the Treasury. So we're also waiting on Secretary of State.
Yes.
That'll be keenly in focus, as well as who is going to be President-elect Trump's national security advisor. And we are seeing a drip feed of some of these appointments. And it's important because personnel is policy. So we know that President-elect Trump has named now a border czar who was in his prior administration. He's also tapped Elise Stefanik, a congresswoman from New York, to be the UN ambassador. New York Post says she has accepted that. The New York Post has statements from both Trump and Stefanik. The Stefanik one is interesting because this means that it's going to be a very slim majority in the House. We don't even have the House confirmed about who has the power there. It looks poised to be a trifecta Republican sweep, but that would mean that Kathy Hochul, the governor of New York, has to call a special election for her district. So interesting that Trump was willing to take this move on Representative Stefanik, because it does mean that it's going to be a little bit harder to shore up the House.
And just on the House, I was reading Terry Haynes' notes this morning. Majorities don't mean control, and it's perhaps the most misused word in politics. But let's just close off with where we are on the House race. We've both got the same numbers open. I mean, again, the predicting markets are saying it is going to be a red sweep. What's happened over the weekend? It
is going to be a red sweep, right? Likely. Poised.
Likely.
And Terry Haynes is 100% accurate.
You
can basically have walking around 218 kings, because to get something passed, everyone's going to feel emboldened to say, well, you need my vote to get it passed. You have to come in line and see my view of things. So it's 203 Democrats, 214 Republicans. To get control, you need 218. So the Republicans are almost there. We're still waiting on at least more than a dozen House races to be called, most notably in California, hopefully by the end of the week, because Congress is heading back. Lawmakers are heading back to Washington, D.C.
For a lame duck session. OK, Anne-Marie, thank you very much. Anne-Marie Horder there with the very latest on Capitol Hill. We'll take a short breath as these equity markets and crypto markets explode higher this Monday morning, right here from New York. Good morning. It's Bloomberg Brief. I'm Manus Cranny in New York. Time for your front pages. This is what we're looking at this Monday morning. You've had the politics. Let's talk about a few other stories. First up, Reuters leads with the U.S. telling TSMC to stop AI shipments to China. It comes weeks after, TSMC notified the Commerce Department that one of its chips had been found in a Huawei AI processor. Now, TSMC said that it was law-abiding in what they do, and that the company would comply with the rules and regulations. Next up, the Journal leads with reports that Russia is weighing plans to merge its biggest oil companies. Under one potential plan, the state-backed Rosneft would take over Gazprom and Lukoil. A Rosneft spokesperson told the Wall Street Journal that the reporting was false. That's according to the information available to him. Let's round it off with Bloomberg. We're leading with this story. China is nearing a $1 trillion trade surplus. The growing trade surplus is generating pushback from other countries, including the U.S. The country is relying on more exports to compensate for weak domestic demand. Well, joining us now is our Chinese economy and government reporter, James Mega, in Beijing. James, look, it's a banner headline of $1 trillion surplus, but let's be frank, they are not alone in terms of their surplus. This is a rising issue around the world. But walk us through the numbers.
So, yeah, I mean, if China's trade continues for the next 2 months, or through this month and next month, as it has for the first 10 months of this year, China's looking at about $950 billion or $1 trillion surplus for the year, which would be a massive record. So far this year, it's up 16% on what it was last year. And, you know, this is not just a problem with the US. Obviously, Donald Trump has made a lot of, for his first term, and then again coming into his second term now, he's had a lot of problems with the large and growing deficit that the U.S. has with China. But if you look at the numbers, the deficit with the U.S. is not growing that quickly. It's the deficit with other places that China, or the surplus that China has with other places, they're actually growing very, very quickly, partly because U.S. tariffs are still quite high on Chinese goods. You know, the deficit with the Chinese surplus with the EU is up 10%. The Chinese surplus this year with ASEAN is up 35%. Surplus with Brazil, India is growing. Surplus with India so far this year, $85 billion. That's more than double what it was 5 years ago. And so you're looking around the world and you're seeing Chinese goods are going everywhere, and yet the Chinese economy is very weak, and so China's purchases of goods from other countries are actually falling. You're seeing falling commodity imports. You're seeing weak imports of intermediate goods from places like Japan and South Korea. So while China is benefiting from this rapid increase in its own exports, it isn't then bringing other countries along and buying their products, or not as much as it was previously.
But then this brings us back to part of the angst from the markets last week, which was there was a plan to help local government bond debt, but there was an underwhelming sense of there's not enough being done to domestically boost demand. That is the eye of the storm here, isn't it, briefly?
Right, and unless they do something to either cut capacity on things like steel, where they have way more steel production capacity than they need, or they boost demand for steel and other things like that, glass and cement in their own economy, then these products are going to continue to go overseas. China has way too much steel, they have way too much copper, they have way too much capacity to make these things, and either they need to boost their own economy to absorb them, or they need to cut capacity and stop exporting them. And if they continue to export them, and they continue to export them cheaply, the US is going to say no once Donald Trump comes in, and the rest of the world is going to be faced with either a flood or they'll have to say no to.
Okay. Thank you very much, James. Great reporting there. James Mega, our Chinese government and economy reporter, with the very latest. Coming up, Mark McCormick, Global Head of FX and EM Strategy. He might have a thing or two to say about tariffs and FX. From our global headquarters in New York, welcome back to Bloomberg Brief. I'm Manish Cranny. Let's set that agenda. Risk on and powering through to new record highs. U.S. assets emboldened as the Republican victory continues to boost appetite. Finish the job. Minneapolis Fed President Neil Kashkari says the path to 2% is not done yet. And President-elect Donald Trump taps his former immigration chief, Tim Homan, as the borders are. Good morning. We're powering through to records on equities. Again, this morning, it is Veterans Day. The cash market is closed. Look at Tesla. I mean, the shorts. There's a great story on your Bloomberg terminal this morning that the hedge funds who shorted Tesla into the election are being quite literally butchered at the moment. S&P 500 up 0.25%. We put on 4.7% last week. Small caps, the best week since 2020, up nearly 9%. You now run into the challenge of whether valuations matter and will yields come back to bite you in the proverbial. S&P trades at 22.5 times forward earnings. The average is 16. Roll it over, and I'll show you not the cash bond market because it is closed for Veterans Day. I want to show you the 2s, 10s, the tightest in nearly a month. We've just had a conversation where the expectation is this is a reprieve for the moment on the rate story. Cash rates, by the way, I'm showing you futures at the bottom. They really are powering lower in terms of price. So down in price on the futures, 23, 30 seconds at the moment. And that is a spike in yields when the cash market reopens. Lots of houses are now saying JP Morgan, Allspring, 5% is where you could return to on yield. Have a look at the FX board because this is the transmission mechanism really of the power of the yield and the power of the dollar. Absolutely powering ahead on dollar yen. I mean, the hedge funds are the most negative on yen since August. The Bank of Japan lacks conviction. The hints about caution on a rate hike with no clear narrative for December. The euro is down. I'll hand the one-liner to Kit Jukes. The euro has a problem. It's called Germany. It's going to take a heck of a lot to hold it off from 105, which is pretty near. And there is the dollar up by 0.25%. Let's take all of that U.S. asset exuberance to Mark McCormick, Global Head of FX and EM Strategy at TD Bank. Mark, this is the very personification of what you said to Danny and I 7 days ago. U.S. exceptionalism, asset exceptionalism translates into dollar exceptionalism. The only thing that I can see as a headwind is a headwind of a pause.
Yeah, I think the only headwind you have right now is positioning, right? There was a ton of buildup in long dollar positioning, Trump trades, as you would call them. And essentially, you know, when we look at our positioning indicators, things look a little bit stretched. I think this is going to be a long and winding road. I think, again, we have a little bit of a runway here until January. We do get data. We are going to kind of look and see who the cabinet members are. I think Lighthizer being talked about as U.S. Trade Representative is kind of interesting again, because that brings that tariff, heating up of trade rhetoric really quickly right into the administration. But keep in mind, we do have data, and some of the European data has got a little bit better. U.S. data seemed a little bit softer, but I would say right now we have an inflation number, and that's a big thing that we've been kind of focused on. Is the last two indicators we had on inflation, we've seen upside surprises. So I think if we do get a dollar dip, it's going to be very shallow and very short.
Okay, and that CPI is expected this week, but you don't think that's going to unseat the dollar trajectory for the moment?
Absolutely not. I think it's going to reinforce, we've seen the dollar kind of moving a certain direction. If the market wants to kind of wind down a little bit on the positioning side, we're actually looking for an upside on CPI this week in terms of the month over month, a little over 0.3. So I would say that if there is a little bit of a pullback here in the dollar, even as we go into the data, the U.S. data itself is reinforcing you want to buy the dollar, independent of what's kind of going on around the election and the trade war and all the associated policy indicators.
If I look externally, I look at the ECB, the PBOC, and the BOE. Who front loads most aggressively here to try and counter the alpha of the dollar?
It's kind of interesting because they all have to kind of go in the same direction. I think what you want to think about is that we are, as you just mentioned, the problem for the euro is Germany, and it's also France. Those two countries have challenging kind of political environments, political economy environments. It's really going to force a lot of uncertainty. If you look at the uncertainty indicators themselves, which scrapes news indicators and looks at that around a theme of economic uncertainty, it's the highest in Germany. So we're likely to see, again, we saw the government collapse. We're likely to see elections potentially as soon as January or February. And so the euro is going to be dealing with local uncertainty and external uncertainty. So I think if you have to think about where the transmission mechanism comes in is how is Europe going to grow? How is Europe going to build confidence? How is Europe going to attract capital flows, particularly when we think about equity flows? I think China is a little bit different because China's had the money. China has savings. China has enough capital to grow. It's just chosen not to. So what I think here is the euro is going to be the first one to go, especially because if you kind of think about what the policy incentive is in China is they do want to maintain stability in the renminbi. And I think a big thing here is they're not going to let the currency go to offset the economic uncertainty and the shocks that have come through on the trade side. I think they're actually going to, again, continue to try to cap it. So a lot of this is probably going to come through the euro. It's going to come through sterling. But I do see Chinese policymakers kind of holding steady. I think we can get to a 730 really quickly. And if the trade war really heats up early next year, maybe we get to 745, 750. But I think that's kind of the red line in the sand there. So I would say a lot of this is going to come through the euro.
So that's a pretty powerful call on the yuan. Let's just drill into the euro-dollar trade a little bit, and obviously euro-yen is where we maybe see a little bit more action. It now sounds as if obviously we've got a trade angst in the euro, we've got rates angst in the euro, and we now have a very serious political flesh wound potentially to come to the euro. With that trifecta, is there an inevitability of a path to parity?
Absolutely. I think this is kind of the worst case scenario you could think of for the euro. I would say, again, 105 is probably an interesting number that is, markets like these kind of 110, 115, 115. Yeah. The next move from 105, and you kind of open up your charts, you go back to last 5 years, you go through 105, you're just looking at parity just as a technical level. That's not even withstanding the kind of fundamental changes that are likely to occur once we get to January and we see the policy implications. So again, the key thing that we kind of look at in FX, and I know a lot of people like to look at central banks, but again, look at the relative equity markets, look at the relative growth story. You're still getting more carry in the US. So I think, again, there's going to be very challenging for the euro in this particular environment, and parity is absolutely in play. And again, I think people are going to talk about it very quickly. We actually we had that parity radar screen in mind in July, early in the summer, when it kind of looked like a red wave was the most likely outcome. But again, it's now going to come back to the fore. And again, we're now dealing with this with a very challenging political environment in France. Again, the rhetoric in Germany is kind of heating up in terms of where the election is going to go and what the outcome is going to be. And again, the outcome for the German election is going to be huge, because if Germany doesn't figure out a way to grow, we're going to look at parities and inevitability. But if Germany finds a way to maybe try to manipulate the debt brake or try to find a way to stimulate the economy, that could be something that this election could be a good outcome, at least relative to a baseline where the euro could hit a euro. But that's going to be very critical, is how does Germany find a way to grow?
Very quickly, Mark, I mean, there's no doubt about it, it's going to be gripping. Just very, very briefly, I just wondered to what extent did we have a head fake on dollar Mexican last week, because it was, crashed on day one, rallied on day two. Ultimately, every rally in Mex is an opportunity to sell.
I totally agree. I think, again, this is kind of like when we think of worst case scenarios. For the euro, again, this is bad because the local story, the external story. For Mex, it's the same kind of scenario where if you think about what happened, we had a election in Mexico this year that didn't go as markets as expected. Sheinbaum basically has about 2 seats. She's missing about 2 seats to have a supermajority, which means you could have constitutional change, you could have judicial reform. All these things, it's a bit scary when you think about the en bono market, which is basically held 30–40% of holders are foreigners. So I think the story in Mexico is a local story has gotten challenging for markets to understand. We've talked about this before. The carry trade, all the pieces that you care about for the carry trade, they've all fallen apart this year.
They haven't.
So again, the Mexican peso has been the key underlying currency that people liked on the positioning side. In the U.S. election, again, the key thing to watch here is USMCA has a sunset clause next year. So there's going to be renegotiations around the old school, you would call it NAFTA. But Mexico has a big spot to lose here. Number one, if the U.S. decides it doesn't want Mexico to participate in any kind of trade relationship with China, or if two, U.S. finds a deal with China to invite China into the North American supply chain, then it cuts Mexico or it reduces Mexico's role within that supply chain, which is Mexico's very reliant on growth, selling stuff back to the U.S. And third, if we think about immigration, a big driver of Mexican capital flows comes through remittances, which is essentially people who have moved to the U.S., send money back home. If there's any kind of movements on immigration, that's going to have an impact on the capital flows, which has been very supportive of Mexican peso over the last 5 to 10 years.
Mark, great landscape setting. It's going to be a bumpy ride, as you say, through 2024, a long and winding road of FX. Mark McCormick there of TD Bank on Bloomberg this Monday morning. Good morning. It's Bloomberg Brief. I'm Manish Cranny in New York. President-elect Donald Trump's cabinet is taking form with just 2 months to run until he makes his return to the White House. The former president is tapping Tom Homan, who was the public face of the zero-tolerance immigration policies, as his new border czar. Bloomberg's Meghan Crane joins us now from Washington. So, Meghan, when we look at this in terms of the immigration narrative, obviously we have the big take, the first 100 days, the appointment of a zero-tolerance czar. What are they capable of delivering? What are the logistics involved in actually delivering one of the biggest deportations in history? Good morning.
Good morning. Yeah, that's really the big question, isn't it? They are going to be focused probably on removing the million or so people who have no legal recourse to stay in the country at this time. But that requires a lot of logistical challenges, getting those people, rounding them up, I suppose, is one way to articulate that. But importantly, they have to get permission to bring them back. There are countries with whom the United States does not have good relationships. Presently, Venezuela, for example, China, who have refused those flights before. So there are logistical challenges to removing even the people who do not have a legal recourse at this time.
Now, look, markets bounced around on late on Thursday and on Friday that Lighthizer may make a return. Then there was some sort of quasi-denial by him. But here we are. It can range between 20% to 60%. We don't know the details on tariffs. But in terms of the first 100 days, the debate is going to be whether it is fast and furious and a lot of noise, or whether it is actually blanket tariffs in the first wave.
Right. Well, then I think we have to go back and look a little bit at the first Trump administration. There was a lot of noise and not necessarily so much action in the first 100 days. But Trump seems very determined to move quickly. He is talking about appointments that are of people who will really want to move forward on those things quickly. These are tariffs are obviously things he can implement just by dictate. So, like you said, a lot of things are up in the air. It depends on sort of what the impacts of those tariffs start to do to the markets, how he would respond to that.
And let's just square away. We're counting the numbers, the betting markets. I mean, they've laid their bets against a number of different things. Scott Bessent, almost a shoe-in for Treasury Secretary. But when it comes to the House, it is assuming now more and more that we're moving towards a trifecta. In other words, a red sweep in the House of Representatives. There's the numbers at the moment, 213, 203. I loved Anne-Marie's line. It could be 218 kings and queens walking around in the House of Representatives on the red side.
Yes, it's definitely, you'd rather be a Republican in this moment when they're sort of finishing up the counts. The Republicans need, 5 of those open seats or, remaining seats to win, and the Democrats need more like 15. So the Republicans are in a much stronger position at this point. It looks like they will be able to, for at least the first several months, push through what it is they want to do. They will have a narrow majority if they have one, however, and that hasn't proven a particularly efficient way for them to get things done in the past.
No. Megan, thank you very much. Megan Crane there on the first 100 days. What you can expect, it is your big take. Jump on your Bloomberg terminal and catch up with the very latest. It is the weekend's edition, as I say, of the big take. So we're talking about the President-elect Donald Trump. He's getting busy with his foreign counterparts. We understand reports of phone calls with the Turkish President Erdogan, Israeli Prime Minister Benjamin Netanyahu. And in the Washington Post reporting this over the weekend, that he also spoke with the Russian President Vladimir Putin on Thursday, discussing the goal of peace in Europe. Now, this morning, Putin's spokesman told reporters in Moscow that the report was, quote, pure fiction, and that there was no conversation. Stephanie Baker knows a thing or two about Vladimir Putin and this world of fact and rumour. Stephanie, good morning. Good to have you with us. So we've got the Washington Post saying that there was a conversation not to escalate the war in Ukraine. Now we have the Kremlin denying the report took place. This is the beginning of the kind of political theatre that we can expect a lot more of. What did you make of the denial, first of all?
Well, it wouldn't be the first time the Kremlin denied a report that ended up being true. Remember, Dmitry Peskov, the Kremlin spokesman, repeatedly denied that Russia was planning to invade Ukraine back in early 2022. And he also denied a Wall Street Journal report last month that Elon Musk had been in regular contact with Putin. Now, neither of these reports have been confirmed by other outlets, but the reporters at the Washington Post who wrote that story are experienced and well-sourced. So if it's not true, that means several sources in Trump world deliberately released false information. Now, Trump actually said after his call with Zelensky that he was planning on talking to Putin. So it's in keeping with what he's been up to. And I think part of the problem here is that there are no State Department people on any of these Trump calls with world leaders, as would usually happen. So we're left guessing with anonymous reporting. And I think the truth will eventually come out.
And I think, as Anne-Marie pointed out a little bit earlier when I was chatting to her, they can have these shadow conversations, but without this governance in tow, it's going to be very difficult for the world to understand what is going on. But let's pivot to one or two conversations that we do know happen. Netanyahu says he sees eye to eye with Trump on the Iran threat, which I think is fascinating. But what caught my eye even more so is that Elon Musk, by all accounts, was introduced on a call to Zelensky. This just shows you where we are with foreign policy, or the risks of somebody not elected and a billionaire status joining calls of national security importance for the United States of America.
Right, and someone who doesn't have any national security clearance and probably won't get any, and has business interests both in Ukraine as well as elsewhere. So I think this is, it is difficult to sort of sort through what's really happening here. Obviously, Elon Musk has allowed Ukraine to use Starlink, his Starlink satellites, in Ukraine, but stopped Ukrainian officials from using it over Crimea because it's claimed as Russian territory. So I think Elon Musk's role in this is very interesting because of that report that he had been in touch with Putin. What is his agenda here? And it's all very murky, and there's not a lot of disclosure.
Okay, Stephanie, thank you so much for joining us. Our Bloomberg Senior Investigations writer, Stephanie Baker, there on the very latest. Bitcoin is on fire. Global markets are moving. Yes, it is Veterans Day. The bond market is closed. But let me just show you what is going on across these assets at the moment. S&P 500 powering ahead. It made 50 records last week. We put on 4.7% last week, trading at 22.5 times forward earnings. Let's see how the bond market opens tomorrow morning. I want to show you the crypto markets as well, powering through. We made it up to, let's just double check. There we are, Bitcoin at the moment, 82,150, up 96% so far this year. Emily Nicole is with me. I mean, wow, this is the Trump trade of pro-crypto deregulation writ large, isn't it?
Yes, definitely. Yeah, Bitcoin's been on a bit of a tear over the last few days ever since Trump was elected, getting up to that new all-time high of above 82,000 early this morning. We've definitely seen a lot of money being flowing into crypto over the weekend, and a lot of the smaller tokens are up as well, some of them even outperforming Bitcoin. Coins like Dogecoin and Cardano's ADA are both outperforming Bitcoin as well. Do you get a sense that the institutions had de-risked? Part of the narrative I know in the stories is that the institutions had de-risked ever so slightly going into this, but you're seeing record inflows into the ETFs. There was definitely a bit of caution before the election. We didn't know which way it was going to go. The polls were definitely indicating a neck-and-neck tie, although crypto-based prediction market, Polymarket, was saying it was a lot more in favor of Trump winning, and of course it proved to be correct. And so now that that's over, and we can now see that there's definitely going to be a clearer path towards crypto regulation in the US, a more pro-crypto stance from the US government, that's why institutions are probably now feeling more comfortable about getting involved in Bitcoin again. So what exactly has Trump promised to do? Because obviously Gary Gensler was a thorn in the side of the crypto world for a long time. There was a lot of conflict, especially over the definition of what Bitcoin was in terms of an asset. What's the promise? So over the summer, when he was on the campaign trail, Trump promised to fire Gary Gensler on day one. As you pointed out, Gary Gensler has been a thorn in the side of crypto for quite some time. There's been a lot of enforcement actions against crypto companies over the last couple of years. So that was a big one that the industry really, really wanted. And then other promises have included making sure that all Bitcoin mined from now on would be in the US, because a lot of the technology used to mine Bitcoin comes from China. And he hopes to create a strategic reserve based in Bitcoin for the US government as well. So a lot of promises. Let's see what translates from electioneering to actuality. Emily Nicole on the crypto trail this morning. Coming up, we'll set you up for your trading day and your week. A host of Fed Speak coming along right here on Bloomberg. It's Bloomberg Brief. I'm Manus Cranny in New York. A look ahead for this week. Bond traders, cash is closed today, both in the US and in Canada. It is Veterans Day. Futures are open and they are powering lower in price. We've got a host of Fed Speak coming through the week. Waller, Barkin, Kashkari, Harker, Williams, all on deck. And in data, it is all about the CPI. That will hit the tape on Wednesday, followed by the retail sales on Friday. The health of the consumer, important. Tesla this morning, absolutely powering ahead, extending its gain. The stock climbs above $1 trillion in valuation. Of course, that was a lot of the hedge funds were short of Tesla into this election, so they are being taken out one by one. Coinbase, MicroStrategy, crypto-linked stocks all rally as Bitcoin climbs above the $82,000 level. S&P 500 up 0.25%. We put in 50 record highs last week, so this market, the dollar is strong. Equities are rising, and when those bond markets reopen tomorrow morning, it's going to be interesting to see how that spike in yield, if it holds, challenges through to the equity market. I'll see you in just a moment. The surveillance team will take you through the next couple of hours. Context Matters on Bloomberg.